All got it. We are live on YouTube. Boom. Welcome, players.
What's good, guys? What's good? What's it? Jerome. Duck.
Yeah, Jerome just be doing the mostest out here. Watch out for this guy.
No, you start off with the right energy, bro. Starting off with the right energy still.
100.
Bro,
100.
should I post? Yeah, I'm gonna post.
Post? As in what?
On our main page, Insta.
Oh yeah. Oh yeah, I've not done that. I've not done it on the main page. Good shout.
Should I do that now? Yeah.
Yeah. Just put the poster on there.
Yeah.
And then I'll go to the Twitter.
Yep. Episode of the game. We cover. So there's Warren Buffett and then the portfolio guide.
Yep.
Then we cover some of those.
Give it another 5 minutes and then we'll get started.
Yeah. I never have my phone on loud, bro. This typing noise is jarring me. You know the ones when you set an alarm, you make sure the alarm doesn't make sure the alarm actually goes off. You got to keep your phone off loud.
Yeah.
Yeah, I do that. Okay, I'll give you guys.
I'm about to post some gems.
Okay, I'm gonna tag every man.
I'm about to post some gems on the IG. Oh my days.
Oh, Twitter, bro, on the Twitter.
I'm about to snap on the IG and the Twitter with what I'm about to post.
Well, I didn't even tag you on the IG, bro. I didn't even tag you, do I?
Nah, I don't need. I've not got IG anymore.
I can't even tag you.
Yeah, I've deleted it.
Oh damn! You're just a ghost. You're just a ghost on the main post. That's true.
Yeah, it's just straight. If you know me, you know me. You do like the levels of the game I'm firing out now. Like if you don't know me, you don't get to get this stuff. You don't, because I'm just giving out too much. So I was just like, nah, you know what? Too many people that are just watching are just,
Cool.
What's the date today?
Are we?
29th, right?
Yeah, 29th. For episode, blah, blah. We don't add locations or nothing. Yeah, that's it, done. Share. Yeah, that's out to the people then. I'm gonna put it on a story now.
Cool. And then I've just done an additional post. Boom. All right, cool. Let me share screen and go to the IG for the news. Oh, yeah, the disclaimer. I'll do the disclaimer first.
Yes, please, broski.
Close down.
We're not live yet. Are we live?
No, we're live. What,
on the YouTubes?
Yeah.
Oh, what's good people's them? They don't even know, man.
Yeah. And our YouTube views are racking up, you know. We're starting to get the same amount of people turn up on YouTube as...
bro, I can't...
Oh, you've gone.
Big love, everyone, man. And big love for the birthday messages as well, guys.
Yeah, and me as well. Big love for that, guys.
Yeah, man. We're August babies. You know, them August babies really out here, man.
These Leos. We're coming to eat the
I'm
whole
a Virgo.
Thing. Oh, you're a Virgo?
Yeah, bro.
Oh, first. All right, cool. So disclaimer. Especially in this episode, more so than in any other episodes, we have to really make it clear that we are not financial advisors. We're going to be discussing what Warren Buffett would do with $10,000 if he was starting investing. We're going to talk about what we would do with $100, what we would do with $1,000, $10,000, and $100,000 as well. So very interesting.
100K as well. Ooh.
Yeah, we're gonna do the 100K one as well. I saw. I'm not gonna lie. Credit where credit's due. I saw Bitboy Crypto do this, and I was like, I agreed with some of it, but some of it I disagreed with. So I wanted to kind of put my take out there and on how I manage my portfolio and how I do things that I think a lot of people don't consider. That I think is important to say and to get it out there and to add key things in there of what you should be looking for when it comes to investing, in my opinion, not as a financial advisor, because the disclaimer says all content is for education, information, and entertainment purposes only and should not be considered as investment advice or a recommendation to buy, sell, hold any assets or place any trades. Please do your own research. Our content is intended and should only be used for informational use. It is very important to do your own analysis before making any investment, which could be based on your own individual circumstances. You should always take independent professional advice from a professional advisor or independently research and verify all information you may find on our show that you wish to rely upon, whether you wish to make an investment decision or otherwise. All investments come with what? Risk. Please do your own what? Research. We are not financial advisors. We do not intend to be perceived or received as financial advisors. Keisha, you a financial advisor?
Unfortunately, I don't have that piece of paper, man. I ain't a financial advisor.
I ain't got that piece of paper either. So, however, we are working with several people that do have that piece of paper that class themselves as accredited financial advisors. So if you are unable to mitigate your risk, then contact us immediately so we can refer you to an accredited advisor. Everything we say on the show is for education, entertainment purposes only. We are edutainers. Okay, cool. So let's get into the news and the updates. So it's been an interesting week. Again, obviously, the biggest news that we've had over the last month is the BlackRock confirmation with Coinbase. That is what doesn't make any sense to me is that the markets fly up when Facebook does a name change, but when a $10 trillion asset management company decides that they're going to be backing the #1 crypto exchange, nobody cares.
Right.
It's funny that, isn't it?
It's very strange.
So yeah, first thing is I'm just going to start off with a bit of TA. This TA is going to come back later as we go on as well. So one of the things that I noticed and a couple of people are noticing is that right now there is an Elliott wave happening within the markets. And you can see right now it's coming down to the 618 retrace on the fib level. And then the fifth wave would then bring us to the 618 extension. So the timing is flawless on that one. And then also DOT almost escaped my buy zone, as you can see here. So this has been my buy zone. I had another cheeky one there. I had a sell zone here. But yeah, buying again around the $7, $6 zone. Almost escaped it and then came back down. So I've purchased some DOT, full disclaimer there. So let's go on to other news. So tech giant Samsung is planning the launch of a crypto exchange. Yeah, mad. So imagine every Samsung phone just comes with a crypto exchange.
No, but you remember that VC though, who is basically Samsung, this Korean guys.
Oh yeah, true.
Yeah.
Yep. So this is a game changer, if you ask me. So yeah, watch out for that. And I would look out for projects that are in Samsung's portfolio because they might do very well. Do you want to do the next bit of news, or should I do all this news? It's up to you.
Oh yeah, go for it, bro.
So Coinbase have got a group called the Trust Network, and PayPal is the latest company to join. In the Trust Network, it's pretty much the Illuminati of crypto. It has Circle, who own USDC. It has Kraken. It has Binance. It has Crypto.com, Robinhood, and Nexo. So if anything, I would say these are the names of the companies that probably aren't going anywhere anytime soon. And again, all of those companies, you wouldn't believe it, but most of them have got heavy investments by BlackRock, the ones that are publicly listed anyway. Next, these Ready Player Me. This is an amazing post by Storm. Big shout out to Storm for the amazing work that she's doing for us. So Ready Player Me by A16Z, which is Andreessen Horowitz, which is one of the biggest VCs and definitely one of the biggest VCs in the crypto space, has backed them. They've closed 56 million Series B funding, and it's in the main Andreessen Horowitz gaming fund. So let's see what happens with this. It's looking like a very interesting project. It's got the likes of Justin Khan, the Roblox co-founder, and Kevin Hart involved. So it's a very, very interesting project. This I would keep an eye out for it and look out for any developments that happen with this project. Next bit of news. So the key news. So this bit of news now is just like key stats. So I'm going to zoom in because some of the stats that I'm about to give away.
Oh, it's not zooming in the way it should zoom in. You know what it should be on? You should be on a Mac. It would be no problem. You can just go like this.
Wait, I know what to do. Let me see if this works. Oh, it doesn't even work for touchscreen.
You might have to screenshot it and then pull it up as an image.
Nah, people can see. They're going to have to just look a little bit closer. So big shouts to Crypto Rank. Highly recommend following them. This is the recent performance of the top 10 NFT market NFT collections by market cap. There's a couple of these that we mentioned the other day that we said people should, if they were contemplating NFTs, they should probably look at. One of these projects is a project that I would include in my 100K portfolio, and that is VeeFriends. In my 100K portfolio, definitely would include VeeFriends because it's one of the best NFTs that's always held its value, always increased in value. And it's an NFT that's not even going to just give you financial gain. It's going to give you network gain because the VeeFriends give you access to all of the VCon events. And who are the kind of people that go to VCon? Entrepreneurs and investors. So if you have a business, going to VCon is only going to benefit you. So for me, that's a no-brainer on that one. So yeah, that was why VeeFriends would be in my 100K portfolio. So if you got 100K, if I had 100K right now, I would definitely be getting myself a VeeFriend. Next bit is very, very, very key. I want you to write down the names of these projects that are listed here. Please write them down because it will all make sense. Now, why am I saying write these down? I'm saying write these down because these are the top 15 blockchains via 30-day revenue growth. We have to remember in investing, we are investing in businesses. Now, a business has to make revenue to make profit. The more revenue a company makes, the more profit it can make if it's got good margins. So the fundamentals of a good business are, please type in chat, what is the fundamentals of a good business? Give you 10 seconds to do that. Because people are buying crypto projects and getting involved in crypto projects that have no revenue. So if your crypto project has no revenue or the revenue isn't increasing, is it even a business or is it just a scam? Because that is 99.9% of these crypto projects out there on CoinMarketCap and out there have zero revenue. They're just a way of somebody fleecing you to get money for a project that they're trying to do or pretending that they're trying to do. And trust me, it happens. We see it a lot. So the reason I say that is because we can see Zcash's revenue in the last 30 days is up 456%. If that doesn't pique the interest of traditional investors and the big whales, I don't know what will. The next one that I would note there is both Filecoin and Polygon. Why Filecoin and Polygon? Because Filecoin, we already know the Winklevosses are involved in. who also owns what project the Winklevoss is also involved in? Nifty Gateway and USDC Circle. Who is a part owner of USDC Circle? Coinbase. Who is a part owner of Coinbase? BlackRock. Connect it all together. Who's probably invested in Filecoin?
Yeah.
One of the other things about Filecoin is Filecoin has had a massive, there's a massive part of what are they called now? Oh, no, what are they called? That do the big reports. Not Masari, Grayscale. The Grayscale fund has a massive Filecoin position. So again, I would look out for that. So Filecoin is actually something that I would put in my 10K portfolio and also in my 1K portfolio.
Just to touch back on Zcash as well, a lot of people are mining it as well.
Mm-hmm. So, now, in my Polygon would go in all of my portfolios. Now, on my £100 portfolio, I would be putting at least £5 into Polygon. I would also be doing the same thing with Binance. I would be getting at least £5 worth of Binance with my £10 with my £100 portfolio. I would be getting at least with my £1,000 portfolio. I'll be getting at least £100 worth of Binance. Then the same with my 10K one. I'll be getting at least a minimum 5 Binance tokens. And then my 100K one, yeah, you already know I'm probably going to get 100 Binance tokens there. So the other project to look out for that would go in all of my portfolios would be the Polkadot one. So Polkadot at the prices that it's at now, you have to bear in mind Polkadot at one point was at, let me tell me if this is still sharing my screen. Should we just go to the charts?
No, you got to rechange it.
And you're getting another look at my actual crypto portfolio. It's not my main one because I have multiple portfolios. No, I haven't given my whole list yet. So I'm just going over some of the things that would be in there. But no XRP because XRP doesn't have that much revenue. Why doesn't it have that much revenue? Because it's got a court case it's been going through for the last however many years. And again, I've been stressing this since we started. There's a lot of people that are obsessed with XRP and they have 50-80% of their portfolio in XRP, and they've just missed out on all the gains that they could have been getting in other projects over the last 2-3 years. And this is the other thing that I would say is in the crypto space, I would never have more than 20% of my portfolio in one crypto. Like, it just doesn't make any sense to do that. But we'll come on to that later. So Polkadot, we're looking for. It's sharing my screen now, right?
Yeah, bro. Yeah, we can see it.
So Polkadot, we can see the all-time high was $55. And this was the buy zone that I was suggesting. This is the other buy zone that I bought in at. And this is the buy zone where I'm buying now in line with where it was before. So between $2 and $10 for me is a great price to buy, because from there to take profit points, if it goes from $10 to 25, that's a good flip. If it goes from here to $100, amazing. If it goes from there to where I expect it to go to, which is $212, even better. Now, again, if we look at some of the technicals, RSI is flat. There's a nice foundation here, nice support line there, as you can see. It's just beautiful right now, Polkadot. But again, that might not stay that way. But why Polkadot? Because I believe in it. I've done my research on it. Highly recommend you do your own research on it. Let's go to the next one. So the next one, the next post is none other than looking at what Binance Labs and FTX and Coinbase Ventures have in their portfolios. We've done this before with you, where we show you how to go over their portfolios in more detail. But what you're looking for is you're looking for correlations. So you're looking for correlations between the big boys, Binance, FTX, Andreessen Horowitz, and any other big players that you know that are invested in the same thing. Because if two research teams that have got massive funds have flagged a project, that means it's probably going somewhere. So that's where I would say these are the projects you want to research. Two of them we've discussed on the show already in the FTX portfolio. Sky Mavis, we've discussed some of their projects. If you don't know what Sky Mavis is, it's the guys that make Axie. And then we've got down here the portfolio of Coinbase. And this is the low cap portfolio. Now, the reason I say that, why it's important to look at the low cap portfolio, we're going to come on to that later when we start talking about Warren Buffett. And then the top 10 gainers of the week. These are the projects that have done the best this week. So we can see that there was gains to be had. There is a 7-day performance of 218% was available. That was the highest. So there is gains to be there in the bear market. Now, again, what you want to look at is what is everybody looking at? Because in two senses, number one, yes, you want to be looking at what everyone else is looking at, but at the same time, you don't always want to be investing in what everyone else is investing in. Why? Because the gains are already gone. If something is mainstream, the gains are already gone. So, and I'm going to break this down a little bit later, because this is a principle from Warren Buffett. This isn't my principle. This is Warren Buffett's principle, and also the gentleman that wrote One Up on Wall Street, his principle as well. So I'm just regurgitating from the greatest and then applying what they do. So we can see Sol, Bitcoin, Doge, Dot, XRP, they're up there in terms of what's the most trending searches. Now, the reason why, and again, this sums up why I tell people not to have more than 20%. Why I personally I don't tell anyone to do anything because I'm not a financial advisor. But the reason why I don't have more than 20% in any project is because you have to understand, especially the higher you go up the rankings. Let's go to CoinMarketCap to make it a little bit more clear and understandable. Is the main reason we got out of Bitcoin, me and most of the team got out of Bitcoin in last October, is because we realized the market cap was too high. When the market cap was 1 trillion, that is not the time to buy, because it's very unlikely that it's going to do 100% gain, because for it to do 100% gain from 1 trillion market cap, it would need another 1 trillion added to it. So no matter what everyone was saying, they just didn't understand the macro picture of what it really means. And this is why I always encourage people, look at the market cap first, then the price. A lot of people are obsessed with looking at the price and going, oh yeah, but it's the prime example of that is Doge. So people look at the decimal places and they go, oh yeah, what if this goes to $1 at some point? But then they're not looking at the market cap. They're not realizing Doge is 8 billion in market cap. That is ridiculous. That's not a small amount. So then what you need to do, if you're not too sure of how big these market caps are, is compare it to traditional companies. So on CoinMarketCap, you can do just that. So you just go to, where is it? Come up here, you go to CoinMarketCap, global charts. Oh, that's the total market. Oh, here it is. Fiat company rankings. That's it. And this will list companies via their market cap. So this is actual companies that are established, that have been around for ages, not crypto companies. This is the biggest companies in the world. So if you're trying to struggle to understand how big a crypto is, just compare its market cap to one of the biggest ones in the world. So we can see Apple, which is the most valuable company in the world outside of Saudi Aramco, is at 2.6 trillion. 2.6 trillion. So Bitcoin was worth more or less the same as that at one point. And then that's when you realize, hang on a minute, that doesn't quite make sense. So then Berkshire Hathaway, 638 billion. So we were looking for Doge, which is at what? What did we say it was? It was at 18 billion, was it?
I think it was 8 billion.
8 billion. So these are 400 billion companies, 140 billion. Let's go. So 65. Okay, so let's take, for example, we'll go with Ethereum right now. So Ethereum's market cap right now, someone pull up Ethereum's market cap.
So 184
billion.
Yeah.
So that means that they are more or less 3 times bigger than UBS Group, almost 3 times bigger than Uber. And this is when you've got this is where you'll go, maybe this thing is overvalued. Does that make sense? How you compare it? Activision Blizzard. Is Ethereum worth more than Activision Blizzard? What's making more impact on people's lives in the world right now? What's making more revenue? Activision Blizzard or Ethereum? And this is the question you got to ask yourself. You got to do that research. But yes, what you're trying to do is invest in things that are eventually going to scale in that revenue and in that profit. So hopefully that's made sense there on that. So this is just the overall markets. Again, trending search, Mina, Polygon, Polkadot, and Mina we saw is in the Coinbase portfolio and in the FTX one, was it?
Yeah.
Yeah, it's in the FTX portfolio. So is it going to move at some point? Pretty likely. But overall news, Animoca Brands raised 45 million and have a 500 million valuation. Polygon and Sia Network founders launched a 50 million fund. Crypto ATM firm Bitcoin Deposit strikes a 885 million SPAC deal. Afghanistan Central Bank bans cryptocurrencies. Interesting. Almedia Research's CEO Sam Trabucco resigns, which is Almedia Research is actually FTX's venture capital arm. Uniswap is working on an interface for NFT liquidity, and Telegram chooses Ton for its future trading platform. And then Samsung filed for its crypto exchange. So what we're going to do now is we're going to just take a look into Warren Buffett's.
The exchange is in South Korea as well.
Yeah, mad.
That's funny, right? Yeah, it was definitely them VCs.
It definitely was.
Yeah.
So I'm going to show you how you look into some of the biggest investors in the world's portfolios. This is how I found out about the GameStop thing a year before it even happened, because I looked into Michael Burry's portfolio. So here is the investors and their funds. We've got Bill Ackman there. We've got Warren Buffett there. Got Terry Smith there. Seth Klarman. All the biggest bad boys in the world are here. And you can look at their portfolios. You can look at the top 10 buys and so on and so forth. So we're going to look at what Buffett is doing at the moment. Here he is. So Buffett, what's his number one position? Apple. So being as that makes up 40% of his portfolio, guess what? In my $10,000 portfolio, I'm going to have some Apple. In my 100K portfolio, I'm definitely going to have some Apple. Because it's the biggest company in the world. So my strategy for as soon as you're over £100, the moment you're in the £1,000 mark, £10,000 mark, £100,000 mark, you want to own the top 2 of whatever sector you're interested in my opinion. So in crypto, that would mean that if you've got 100K, you would have some Bitcoin and some Ethereum because they're the top 2. You would also own some Apple, some Microsoft, because they're the top two. But you wouldn't have more than 20% of your portfolio in those top two. They just provide the foundation that allow you to not pull back, because those top two, Apple isn't going to dip 90%. Microsoft isn't going to dip 90%. Why? Because BlackRock isn't going to allow that. Why? Because if they dip more than 60%, the big funds cannot help themselves but to try and buy, because it's such a bargain. So that's the air of safety that you have there with those. So then the rest of your portfolio, that's where you want to invest that. Well, not what you want to do, what I do, because I'm not a financial advisor, is put that into things with a small market cap, because things with a small market cap can do 100% returns in a year. They can do 1,000% returns in a year. Things with big market caps, your Apple, your Microsoft, your Google, your Bitcoin, your Ethereum, is very unlikely that you're going to get a 10x out of them. Sorry to burst your bubble, but it's the truth. Even XRP, the market cap's just a little bit too high. It could happen, but it's not very likely. Whereas if you're investing in a crypto that's market cap is 10 million, can it do a 10x? Yeah, because then its market cap's only going to 100 million. Can it do another 10x after that? Yeah, because then its market cap's only 1 billion. Then can it do another 10x after that? Yeah, because then it's only going to 10 billion. And we've seen crypto projects out there like Doge that are valued at 8 billion. So it's definitely realistic. And that's the way that you want to think about it. But Buffett, what's he doing? He's added to his Activision Blizzard position, which I thought was quite interesting. And the last reported price he got that at was $77. The other thing that he's added position to is Paramount. Big shout out, George. Also, LA Financial. He reduced in store capital. Don't know who they are, but he's reduced in there. But the biggest one is Ally Financial. So if Warren Buffett's adding 234% to this position, it's worth going and doing your research on it.
Exactly.
It's not one I would add to the portfolio. It's just something that I would look at and go, why is he doing that? And then look at what other super investors are also doing the same thing. Cool. So that's that on Warren Buffett. So now I want to play a little video, if I can get it up on YouTube, just going over what Warren Buffett says he would do with 10K. And then I'm going to go over the notes on it. Okay, Warren Buffett, 10K portfolio.
And how long ago did this video come out?
Years ago.
Okay. His strategy ain't really changed though.
Michael Zenga from Danvers, Massachusetts. That's a town whose band Mr. Buffett so generously sent to the Rose Bowl parade last year.
Bro, you're not
Very
showing.
popular guy in my town. Good morning, Mr. Buffett.
Oh, say that again.
Share screen.
Oh. Mr. Munger.
Oh.
Mr. Buffett, I want to ask you this question last week when I ran into you after Gillette's annual meeting, but I choked. So now there's no pressure. Here goes. In the years from my reading, in the years from 1956 through 69, you achieved the best results of your career quantitatively, 29% annually against only 7% for the Dow. Your approach then was different than now. You looked for lots of undervalued stocks with less attention to competitive advantage or favorable economics and sold them rather quickly. As your capital base grew, you switched your approach to buying undervalued excellent companies with favorable long-term economics. My question is, if you're investing a small sum today, which approach would you use?
Well, I would use the approach that I think I'm using now of trying to search out businesses where I think they're selling at the lowest price relative to the discounted cash they would produce in the future. But if I were working with a small amount of money, the universe would be huge compared to the universe of possible ideas I work with now. You mentioned that 56 to 69 was the best period. Actually, my best period was before that. It was from right after I met Ben Graham in early 1951. But from the end of 1950 through the next 10 years, actually returns averaged about 50% a year. And I think they were 37 points better than the.
Right. Bear that in mind. He was doing 50% a year.
Per year, something like that.
Now,
but that I was working.
The reason
with
I
tiny,
iterate
tiny,
that
tiny amount of money
is because of something I'm going to show you.
So I would pour through volumes of businesses, and I would find one or two that I could put $10,000 into or $15,000.
So the key takeaway there is time. So the reason Warren Buffett is so rich, he's valued at what, 190 billion or something like that, and his company's worth like 600 billion or something like that, is because of the amount of time he's had in the game using the compound effect. So hopefully you've all heard about the compound effect and you understand the power of it. I'm going to play a little quiz with you to show you the power of the compound effect. So if you were to where's my notes on it? Oh yeah, there we go. All right, cool. So if you was to invest for 40 years, now Warren Buffett started investing in his 20s, so he's had the power of the compound effect. He's in his 90s now, so he's had it for like 70 years. So if you apply the compound effect to 70 years, it's pretty hard to not be a billionaire if you're getting just 10% per year. So let's look at those stats.
I think we should pull up a compound calculator.
I was going to do exactly that. If you can get one, though, it'd be good whilst I read these out.
I'm on my iPad, so it's a bit different, but let me see.
I've made you co-host anyway. So this is normally something I do with like paid students, but I'm going to go over it now anyway. So if you had 10K invested for 40 years at a 10% return, you would then have, after those 40 years, £452,000. That's without adding any money to it. How many people are in a position where they retire with that amount of money? Not many. So let's now change that for an extra 10 years, because the golden rule of the compound effect is it's either working for you or against you. So let's do initial balance 10,000. And what do I mean by that? Is the compound effect is working against you in terms of inflation.
I want to do 10% a year.
Yep. And we're doing for 50 years now instead of 40. That 10-year difference, what does it make?
And that's compounding monthly, yearly, daily?
Yearly.
Cool. Let's have a look at the results. That £10,000 would be, taking a while to calculate,
1.1 million.
No, yeah.
Now, from what we know about the markets, including crypto, because Warren Buffett didn't have crypto, is it possible to get 10% per year?
Without a doubt, yeah.
So there is no excuse for anybody that's watching this to not be able to achieve this goal that's written on the screen. So now let's change it again. Let's say most of us are on this call or in our 30s, and we then end up investing. We know that the results are a little bit different. We know that we can get more than 10%. So let's change it from 10% a year to 20% a year.
Yeah.
And
with
go
10K?
40 years.
With 10K over 40 years, yeah?
Yep.
That'll be 14 mil.
That is a very good retirement, even with inflation. Because again, this is why I'm saying you have to count in inflation, because inflation's going up at 10% a year or 5% a year.
I think anywhere 10 million above for me personally is good for retirement.
Yep, because if you aren't investing and you don't have compounding in your favor, that 14 million is going the opposite way. If that makes sense. Hopefully that you've been able to break down what I'm saying.
Oh yeah, but the power of compounding is insane because you're making the money on a return, and then that return and your money grows as a pool, it grows, and then you make more money as a return because you're working on percentages. So that's why the compound effect is the
let's change it to 50% a year, because I think it's realistic to say that with crypto and stocks combined,
with 10K,
yeah, off 10K.
Over
One deposit of 10K,
years,
40 years, still 40 years.
Still.
Yeah. With no extra deposits.
Bro.
See the difference between 20% and 40%?
Bro. I like to work with like the 5% or like the 2% a month.
Yeah.
To see the effect of that.
So 5% a month, that ends up being 50% a year.
Yeah.
Just got to get 5% a month gains.
So
we literally give away 5% gains casually on this show.
Literally. So 5% users, there you go. Let's do this on a daily, because that's what I like to do with my staking pools. Earn a daily reward. That's the number.
Pretty crazy.
That's crazy.
Michael.
Yeah.
Hi. Good day, everyone, or good evening, everyone. I have a couple of questions. Is now a good time?
We're gonna do questions very, very, very shortly in 15 minutes. If you give us 15 minutes, I'm just gonna break something really key down. So one of the main companies that definitely goes in my 1K portfolio, and it goes in my 10K portfolio and my 100K portfolio is Google, because there's something that most people don't know about Google. Google is the infrastructure and the backbone for all information. Why? Because of Google Mail, Google Drive, Google itself, and YouTube. YouTube being the biggest search engine on the planet. People go to YouTube to search things more than they're doing on Google at this moment in time, especially younger generations. So younger generations don't know how to turn that off. They don't know how to go and look for information elsewhere. They only know to do that on YouTube. YouTube, the younger generation goes to for entertainment as well. They don't go to TV. So it's going to be here to stay. YouTube, Google also has the biggest AI stack and biggest AI research team in the world. So everything's in their favor. Now, I'm going to break down Google in a way that I don't normally do. And to do this, we're going to go to bar chart. Let me just load this up. Google. So Google has, again, what's interesting about Google.
Are you sharing screen?
Google is valued at more than Apple, but it's because they've split the stock up into two different classes. So there's Google A and there's Google B. One of them has voting rights, one of them doesn't. Both of them are 1.5 trillion now.
Yeah.
So technically,
or are you just saying something?
Just saying at the moment. Now I'm going to share.
Okay, cool.
So there's other websites like this that you can get this information from, but these fundamentals that I'm about to share with you are what you need to apply to every company you're looking at. And this is what I'm giving you, and this is literally what we give in paid lessons. Obviously, in the paid lessons, we're going in a little bit more detail on this, but I'm just going to quickly share with you the things that you're looking for. So this website combined with hypercharts, we'll do it on hypercharts, and combined with Yahoo Finance and another website, literally takes you 10 minutes max to analyze a company and see if it's in good state. The same way that a Wall Street analyst would analyze it from the 10K reports. So let's go to Alphabet. Cool. So what are the key metrics that we're looking for? Revenue growth year on year, because if it's got good year on year revenue growth, what does that probably mean? We want to see, has the revenue grown for the last 5 years? Yes, check. We want to see, has the net income and profit grown for the last 5 years? Yes, check. Straight away, that's your fundamentals of if it's a good company. Why are you investing in a company that's revenue hasn't increased over the last 5 years? Would you, if a friend came to you and said, would you invest, you've got 10K, would you invest 2 grand in my company? And then they said, oh, but it's not made any profit in the last 2 years. Or it's not made any revenue, profitable revenue. Revenue's going backwards over the last 2 years. Would you invest? No. So why are you doing it with a stock? Why are you doing it with crypto? Why are you not even considering to do that, to look into that? You're just gambling, and you deserve to lose money if you do that. So next one is the one that you want to look for is PE ratio. So you can find that on Yahoo Finance. It's quite easy to find. And again, you need it to have a good 5-year PE ratio. So all the things I'm saying, they apply to the 5-year mark as well. Next one is profit margins. Why on earth would I want to look into a company or buy a company that has good profit margins? Oh yeah, duh, because if it has good profit margins and it's done good profit margins 4 or 5 years running, what does that probably mean? It means it's probably making actual good money. Does that make sense? Hopefully it does. So let's see that on hypercharts, if we can see that. Oh yeah, margins. Which direction are they going? They're going up. Is that a good sign? Yeah. So again, basic fundamental. You apply it to this year and you apply it to the last 5 years. Next one is profit growth. So we've done profit growth already. But the next one is, this is where it gets a little bit more technical, is understanding cash flow. Because sometimes especially with companies, you have to buy a company, and it also applies to crypto, because it also applies to your own personal life. If you don't have cash flow, when shit hits the fan, you're finished. And this applies to you starting your own businesses. If you don't have cash flow and then something happens, a war, COVID, anything random, you're finished because you don't have the cash flow. Now, a good company has enough cash flow to cover all their debts for at least in the cash flow that they have allows them to cover all their debts in 1 year. So look at this operating cash flow. 91 billion. When we look at their actual cash, Google is sitting on 139 billion. Right? Does that make sense? Whereas their operating expenses are 70 billion. So that means that they can run for 2 years without making any revenue, any profit, and still be able to keep the company running for 2 years. That is the fundamentals of a good long-term investment and how to quickly break it down. Now, obviously, we go into that in a little bit more detail, but the next thing that you're looking for, we'll go to the TA side of it. Let me know when it's sharing my screen.
Yeah, Sharon. It's just loading up. Yeah, we can see it.
Now, what's very interesting about Google is also a main hold in the XLC, which is the telecommunications ETF that's held by Vanguard. And right now, we can see it's down. So when would be a time that I would want to buy this? I'd want to buy this. Obviously, the Elliott wave saying that it's going to come down here to $41. That is my dream, that it would come down to $41. That would be a godsend. That would be an unholy discounted stock. If this stock was, remember, there's been a stock split. So this used to be $1,500 to buy a share. Right now, they've done a stock split, so you can get that same stock for $108. So let's turn off the Elliott wave. And let's add the moving average. So we're just going to add the moving average. And we're going to check, is it below the 200-week moving average? Because if something's below the 200-week moving average, that means it's below an average price. So it's probably a good period to buy. And as we can see, that's the 9. Let's add this and change it to 200. And again, what I'm showing you applies to crypto using the 200 moving average. You can see at the moment, it's above the 200-week moving average. If we go to the 200-day, it's below the 200-day. So that is now an okay buy zone. Again, with the RSI, where's the RSI? It's at 37. We want it at 30. So we'll find price to buy. So hopefully that's helped with people understanding. Whilst we take questions, I'm going to write on a Google Doc and show what things I would buy at what prices. And then I'm going to only share it on this show after we've turned off the YouTube. So we might as well ask questions. Rosita, you had a question? Oh, Rosie, are you still there? No. Okay. We'll go to Chris because we haven't had Chris in a while.
Yes, I'm still
Oh,
here.
yeah,
I'm just dry. I'm driving, so I had to pull on the side. Sorry.
Oh,
Yeah.
no, so sorry.
So you mentioned perhaps the potential of getting involved in items or products with low market cap.
Mm-hmm. Yep. Oh, signal's. Is that my signal or?
No, it's not. I think it's on her side.
Oh, she's calling from
I can still hear you guys.
Someone hear me?
Okay, cool.
Oh, hi. Can you
Yes,
hear me?
cutting.
What
Sorry,
I'll do
did
is
you hear the question?
No,
I was asking, what would that number look like in terms of market cap?
So in stocks or crypto?
Well, we were talking about both, weren't we? In
Yeah.
terms of potential for investment.
So with
saying that
crypto, I would say anything under 100 million is low cap.
Yeah.
I would say with stocks, anything under 10 million is low cap.
okay.
Because there's companies that get onto the stock market that have got a market cap of 5 to 10 million. There's cryptos that happens with, but if you can find a stock that all that checklist that I just went through, it ticks and it's under 10 million, that is an undervalued asset that no one's talking about.
Now, in terms of when you're looking at that scale, in terms of time frame, you use a 40-year span model. I
In
know
terms
this
of
supposed to.
the gain that I want to achieve.
Yes. Why was your time frame such a long one? Why wasn't it like a 10-year model time frame? Because at our ages right now, 40 years doesn't even touch any of our realities, to tell you the truth. That's just perhaps retirement and our children and our grandchildren.
Mm-hmm.
So does your time frame, is there space for you, for us really, to adjust our time frame to something less than the 40-year span?
I would say that the 40-year span applies to anybody under the age of 65. If you're under the age of 65, you should have a 40-year plan. Because even if it it's not within your lifetime, the most of the time, the reason why we're creating these portfolios is for generational wealth. So that's where you would lock up those assets and those funds into a trust. And that's where it's key to have, once you get to that 100K level, that's when you need to do what is classed as a portfolio split. So now you have different portfolios for different jobs. You have one portfolio that is for family that's just going to be there forever. You're never going to touch it. You have one portfolio that's super high risk. You have one portfolio that is like a mid-tier that is just like swing trades that you're going to dip in and out of. You have one portfolio that's for options. Well, not that you need to, because obviously I'm not a financial advisor, but that is the strategy that I've seen that works phenomenally well for people. Because if you don't have, we have to bear in mind, the biggest companies in the world and the biggest investors in the world never have one portfolio.
Facts. But also even like to do with your habits as well, because like a lot of us as traders, like to operate as an efficient trader, for example, is extremely difficult. You have to be extremely disciplined, and having a split out portfolio where there's one that's more higher risk, that's separated and is risking a lot less, then I think that is also good, because it allows you to sort of still build up a good portfolio and manage your habits in a sense as well.
Yep.
So you're saying that XRP, Dot, Binance, and Polygon are good ones? I've got all of those though.
For £100, yeah. And then I would
So, say can I add to this?
The rest needs to be books.
Can I add to this, bro?
Yeah, of course.
Okay, I'd put ETH there.
So you're gonna go. So I'm gonna do quiche. Say ETH. Yeah.
Yeah, for me, I would put ETH there. I would put what's it called? In terms of just with £100, I think
Solana.
Definitely getting some books and gaining knowledge would be something that's a more valuable investment.
Yeah, definitely.
So I would say the Ever-Changing World by Ray Dalio, his new book.
Yeah,
on the cycles. That'll be good.
Yeah. And then we'll go. What I'm gonna do is I'm gonna stop the YouTube now. Sorry guys on YouTube, you have to be in